Hi traders, welcome to the video. Please pause the video and make sure you understand the disclaimer before proceeding. Traders, Anthony here, looking at the Euro Swissy. I'm short this guy. I just jumped in with a market sell further back up in here, and I've also set up a limit sell order. I like this trend. We've got this distribution level. We've got this thin candle. Be careful. This could be enticing short traders in here only to spike back up and take out stops above, possibly. So this is why I plan my trades according to these 4-hour levels. So let's just have a look at this quickly. 4H. So we've got this price gap here. I'm looking at this thin candle. There's nothing left and right, so I'm just pulling that, the high and the low of the candles before and after. So that's potential target here, and we've got this distribution level up the top. So I'll just mark that up 4H. It could pull back into these levels, so you want to plan your trade around that. I am in with a market sell, but I've also got a limit sell up in around here. And that's my sell zone. Let's just call this my sell zone, like through there. If you have a look at this from a Fibonacci point of view, pull it from the high to the low. See that 61.8 to 786? See how it coincides with this imbalance? That's an ideal level to go short. In any case, there's a limit order set up in there. A small-ish position down here, market sell. Let's see how we go. I mean, it could continue on, and if it does, well, I've got my feet wet and we're in. If it pulls back up, well and good. Stop loss, if you're going to go for a day an intraday, your stop loss wants to go above this high. If you're going to go for a short, like a day trade, take the risk, and your stop loss is above this level here. But know that there's a risk that this spikes back up in there. The lower time frame trading is a lot more risky than higher time frame trading, obviously. I mean, looking at that, that's basically it pretty much. Targets, I'm just going to be looking left for obvious levels. So if this is a sell here, there's a low, so there's a target. Looking further down, these lows here, there's a possible target. This is a 4-hour time frame. These highs, that's a target. So this target 2, 3, and 4. Target 1, I'm going to go a little higher up in here, take 70% off. So that's looking at it from the 4-hour perspective, guys. That's my idea. Now, what I want to do is I want to take you down to a 5-minute chart and show you how you can get involved with this and navigate the volatility with a very high win rate. This is picture perfect. This is the setup I'm always looking for. This blue line is the London Open. And I'm always looking for the opportunity as we head into the London Open. I love this time. We've got this Asian range, and we have a build-up of liquidity above and below, liquidity pool. But here's what's going on here. So we've got liquidity building above. I'll copy that. Liquidity building under. Okay, fair enough. So what we get is the fakey shaky pattern. It ranges, and this is the fake out. What that does is it increases this build-up of buy-side liquidity. So let's just double that up. This is what smart money is doing. It's manipulating price, and this will happen before a news event. And I like to trade this into the London Open. You can check it out, the New York Open as well, even the Asian Open. Ranging fakey, shaky, to fake out the shakeout, and it builds liquidity. This entices short traders in. Then they take it up here and they take out stops. They wipe out all these stops, and then we get the trade. But you got to be really careful with this because as I look, it could spike further up. Just depends where they decide to price it. Generally, this will work in our favor. We've got a bit of an imbalance up here. It could target that. So we're just going to mark that up, price gap. And we've got another here. So see, there's the Asia close. See how it traded up into it? Now it's rotated. So we could see this drop off here. We're getting lower highs and lower lows through here now. But just be aware that this could, at some stage, possibly come back up in here, looking for these levels. And that's another opportunity to go short. But what I want to show you more than anything is keep it simple. This dot trading into the London Open or New York, I want to see this pattern. I want to see that first off. This is telling me that it's going to look to go short. And then it'll generally trade up, and it will usually give us a dot at these extremes. It didn't paint one here, it painted one here. Okay, fair enough. Your stop loss, if you're using our indicators, see where the dot is. What you want to do is you want to have a look at the cloud, and we're going to measure the distance of the cloud plus a bit. That's generally going to be a pretty good stop loss. And you're going to go in at around the same level as the dot entry, and your stop loss is above, and we're well and truly clear. So that is the setup. What I'm looking for is that accompanied by this guy, and I want to see the majority of this down here in the favor of the trend. So that's telling us we've got a stop run going on. So let's just go back very quickly and have a look. This one is after the Asian Open, and you get the Asian range. It's not an ideal trading environment. It's okay, but I love the London Open. This is the New York Open. I'm looking for shorts, and I'm not going to short it like that. We're looking for this signal. There it is up there. So that was a little bit late, but it's a bearish market. There's your bearish signal. So I'm going to be going off that, and you want to go in at a similar level, and that's your short there. Going back, I really prefer them. Look, this is picture perfect right here. Well, nearly picture perfect. You get this Asia range, but we really didn't get the spike above. We got a bit of a fake out here. We've got this balance area, if you will, fairly even number of buying and selling going on in here. Then we get this. It's not easy to spot at times, but there's the fakey shaky. There's a balance area. It doesn't have to be horizontal. And then we get that. We get the shakeout. As we approach, as I said, the market open, that's the opportunity. And this is the dot right there. You see that dot heading into this, especially when we've got this and that, predominantly bearish. That's the confirmation I want. And there's your sell. You can see how powerful this is. Guys, jump on board. The links are below. I'll ignore these because I'm really looking for session times and news events, because the same kind of price action is going to occur going into session open times, close times, and also news events. I'm not looking for these green signals in a red environment, right? I want short opportunities. There it is. Okay, it's red. We've got majority red on this multi-time frame indicator. There was one opportunity short here, fine, but look at that and look at the outcome. Guys, click the links below, gain access to the indicators, have a look at the We Trade Your Forex account, and if you got that, because there's no pullback into the level, so depending on how you trade this, but definitely look for both of these signals together. That's generally a stronger signal. Yeah, that one gave us a little bit of a trade. This is picture perfect right here. Well, we got this bearish. Actually, you can keep an eye out for this as well. We don't have to have the dot. The dot could have formed here on this move up, but it didn't. If you have a look at this on the 3-minute chart, you'll see there's probably a dot there. In any case, there's your signal. There's the London Open. I don't want to drag this out, but that's the things you're looking for. We want the range, we want the fake out, then the shakeout, right? That's your chart pattern. And there's your trade. Okay, so guys, jump on board. Links below. Smash the likes, comment, do all that kind of stuff. Hope you enjoyed the video. With that, I hope you have a great day. Safe trading. We'll see you in the next one.